Folks, we are live. Welcome to a special edition of the Father's Day version of Sunday Night Futures Live. Okay, um, the futures are open. Not much in terms of headlines to go over today, so we could dedicate some time towards going over chart requests, and we're going to go over the economic data coming out this week. We're going to go over a few reasons why we should be optimistic and why we should still be a little bit pessimistic. In short, why I think that we're going to rally fairly soon. My microphone just fell over. Okay, make sure the microphone is on. Are we still using my microphone? Yes. Okay. I forgot where I was. Anyway, we're going to go over chart requests as much as possible tonight. News headlines, not much out. Quiet news day, obviously. We'll go to say hello to people. First off, to those fathers out there, I hope you had an awesome Father's Day. I did. Went to go visit my dad. We had a good time. Franklin, even Bob, and help us get ready for the new trading week. Yes, a short one as well. Yeah. So for those not aware, if you are on our email list, I sent out this invitation. There's a link below on that invitation to my best stock charts for the new trading week. If you're not on the email list, there's a link below. My 5 top favorite candlestick patterns. Enter your email address. You'll get future email alerts from us, plus the video tutorial and our best stock chart newsletter each week. It is also posted on YouTube, so check it out after this. So in that 5-part video, in the 5 top favorite candlestick patterns, there are a few reversal bars that I'm looking for. One of them you saw today or yesterday on Bitcoin, and that's what we're going to be looking for this coming week. Now, we're going to go over the futures action where the E-minis are up 1%. This does not get me excited whatsoever. This does not make a bottom. I don't know how many times I have to say this. I'm going to do this for the benefit for those that have never been through a bear market. It's been a long time since COVID, since we've had a bear market. This is not a bottom. This is not what bottoms will look like. So we're going to talk about that because it's so critical. The number one reason why people lose money, actually, there's like a bunch of number one reasons, but in reality, you could summarize it up into one word. One word. Under that word, you could put you're too big on your position, you're not setting stops, you are not buying right, you're not buying at support levels, you're not buying on the breakout, you're jumping into a trade with your intended allotment all at one shot, you're not legging in, you're not building your position. All that falls under the headline of one word: strategy. You do not have a strategy. So if you believe that by virtue of the fact that right now, as we're sitting here after a long weekend, that the futures are up, therefore the bear market is over, they're going to get you. They're going to get you. They're waiting for you. They're painting the tape right now. Could they close the market up tomorrow? Sure. Will I be buying? No effing way. No way. Because we have not seen a bottom yet. We're going to talk about a few charts that have put in a bottom. I believe S&P 500, IWM. However, that doesn't mean they can't go down and retest. There's one index missing from putting in a bottom, and it's a serious index. Actually, 2 indexes that are missing if you include the VIX. So I'm going to say 2 indexes that are missing. So let's get to it. Let's go to comments. Let's say hello to people. Franklin, we got Denny. Hello, sir. Hey, Bob. Of course, Bitcoin hit a low over the weekend when the broad market can't get in on the equity. Yeah, right. Exactly. Oh, my mouse. I should have rebooted. Come on, mousey. All right. Paul, hello. Welcome. Callahan, monster, you're madman. You're here. Trader Isaac, hello, sir. Welcome. Town again. Always a gentleman. Saturday's best start was good. Thank you, Paul. I appreciate that. Appreciate it very much. 3 words: define your risk. Outstanding. Paul, Kirk is interesting. Yeah, it is. I love the short squeeze potential there. Oh, you like that one? Okay, good. We like tight bottoms, right? Absolutely. Absolutely. No plastic bags at my neighborhood's Walmart. They want you to go to, I don't know what that means. Go tote? Go tote? Yeah, they did that in New York a while ago where you have to, there's only paper bags now and you have to pay for them. I don't know. Jeff, hey Jeff. Talent and crew, a big hello, and let's go for the week ahead. Yeah, it's going to be a good week. I'm confident. We're going into the new trading week. If people are wondering, because we did a tactical withdrawal from the market to the long side last Monday, because I went into the new trading week. I think I mentioned this on my top 5 stocks for the new trading week. I woke up on Monday. I had to lighten up to the long side. I didn't want to be long, but I was skewed long. I had shorts on, and I'm looking at the positions and saying, I just don't like it. So I cleaned the deck. I kept a couple of positions on, and thank God we did, because the market's just tanked, as we all know. So now we're sitting with a bunch of liquidity. We're able to be flexible. I was able to enjoy the weekend, and now we can take a look at the markets from an objective position. Do I have trades on? Yes. Gold mining stocks, silver mining stocks, a food stock. We have a strangle on the triple Qs, a very, very wide strangle expiring on mid-July, I think it is. So we're generating cash flow, but I don't want to be overly directional right now, meaning I don't want to go throwing out a directional short on the market because S&P 500 and the IWM small caps hit support levels, strong weekly support levels last week, and they held. Transports hit strong weekly support levels, and it held. Is it a bearish candlestick on the transports? You bet. Can it break? You bet. But we don't know that until it does it, right? We don't want to hope when we should fear. Right now, we're fearing when perhaps we should hope, but we don't want to do that yet. So we're waiting for a confirmation of the lows, in short. Now, taking a look at the E-minis, as I mentioned, they're up over a percentage point. Not exciting. Taking a look at the NASDAQ 100, also up over a percentage point. Very thin volume. Let's keep that in mind. The Russell 2000, also up over a percentage point. You're seeing some pressure come in here, but the real deal, you got to look at the 1-hour chart and see where we're at, right? We had a rough week last week. We're rallying back. We have resistance above at the 20-period moving average, then up here at 1719. If you go back, you take a look at the S&Ps. This is why it pays to not use, I don't know what's up with my mouse tonight. Come on, man. Only when I'm live. There we go. All right. So, while you're looking at it, this is a perfect illustration, right? 15-minute chart. Wow, looks good. We're up over a percentage point. How exciting. Wow. We got to buy stocks, right? Then you pull back, you take a look at the 4-hour chart, and you get a really big holistic view of the marketplace, right? So to me, all this is a dead cat bounce. Simple as that. Right? So just like back here, I'm spending time on this tonight because I want people that are watching this for the first time. This is your first bear market. I want you to remember you were watching this, and because you didn't pull the trigger on a painted tape, a green painted tape tomorrow morning, Tuesday morning when they pull that crap, you didn't chase it. Maybe you'll give me a thumbs up, a like, you follow the channel. That's all I'm asking for. So be careful here. They paint the tape, fades. Paint the tape, fades. This is not the bottom. Let's take a look at yields. Yields, 4-hour chart, coming back. We did sell off late last week. Let's go to the VIX. Wrong chart. Now, this chart here is short-term weak, longer-term strong. I'll share with you what I mean by that. So you could see that we were in a consolidation range, a very, very tight wedge. And then what we did is we broke down, right? So we didn't see a resolution to the upside as we have been seeing on the VIX. We saw a resolution to the downside. Now, that being said, you take a look at the trend is still powerful. The trend is still strong. So while we did close off the highs of the week last week, this is not over. It's not a broken chart. All it is simply a consolidation. Now, when do you know that it's all over for the VIX? When do you know that it's safe to go back in the water and buy equities? I would argue down here. If we put in a break of the support level, that would signal a double top, lower highs, and a breakdown to new lower lows. So what that's telling you is that, okay, you're seeing relative weakness on the VIX. You should be looking at the S&P 500, seeing the reverse happening. You should be seeing higher lows, higher highs on the S&P 500, lower highs, lower lows on the VIX. So the odds still favor VIX longs, not shorts, because the trend is still up. Bob, how do I look at the dollar when the market is closed? Are you using Thinkorswim? If you're using Thinkorswim, use $ DXY. $ DXY. That's the Dixie. Yoga Mac, hey, let's go up. Turned 36 yesterday. Happy birthday. Happy birthday. A Gemini. A Gemini. Stubborn. What were you doing at 36? Who says I turned 36? How dare you be so presumptuous? How dare you? 36, I had a son, 1 year old. Yeah, 1 year old. Just shy of 1 year. We were both born in July. He was July the 21st. I'm July the 3rd. And he's now 5. That's a joke. Devin, nat gas down 30-ish last week. Yeah. Oil down 133. Dixie 10-year all popping. Put the call ratio at obscene levels. Yeah. Fear and greed. And that goes along with the sentiment indicator. So yeah, you're not wrong here. So you're seeing certain stars get into alignment, right? I'm going to go over a chart, a bulls versus bears index. We spoke about this on, I believe I spoke about it on the best stock charts for the new trading week briefly. I'm going to go over it again because not enough people watch that video. Everybody's on vacation. We last spoke about that chart back in May, and I said expect a rally. We're very close to the lows of the May lows, which are historic lows. And when you take a look at consumer sentiment, also Michigan Sentiment Survey, same deal there. So what we're missing is, frankly, a washout. We're missing a washout. And I'm not saying that ultimately that's going to be the bottom. We could just, right now, for all I know, we could just rally, counter trend rally in the market, and then roll back over again. Ideally, we get that washout. And remember, we're coming into the month of July on the NASDAQ is a very, very strong month. So we want to get that washout now. We want to get in the rear view mirror, take advantage of the seasonality. I went over that, and I shouldn't say the NASDAQ 100 or the triple Qs. So we'll go over seasonality just to remind people of what we're coming into. But we need a washout. Let's go through the futures action. Crude prices back up just shy of a percentage point. There's a lot of damage done here. But we can't forget, we're looking at 4-hour charts. Here's the macro view, right? Here's a weekly chart. Still very strong, but last week an outside reversal bar, not pretty. So we very well may see new lower lows back to a 4-hour chart. Now, taking a look at the dollar. The dollar rallied back strong, pulled back off the highs on Friday. On a weekly chart, you take a look at the dollar. It's right at that breakout point. We pulled back off the highs of the week. We did not break out last week. Let's take a look at how the euro is setting up. So we didn't give back the gains that we had seen last week. That's a good thing. We want the dollar to weaken up. That's going to help the large caps in particular. It'll also help the technology stocks, the NASDAQ 100 stocks. Why? Because it sounds crazy. Microsoft said the strong dollar is hurting our earnings. So on a forward-looking basis, Japanese yen still very weak. Japan's a problem. Let's go to nat gas prices. Weak, down 3%. Wow. Taking a look at ag prices. Ag prices, they're really getting hit. Unlike equities, commodities tell a story. It's pure supply demand. And wheat prices are getting hammered. I mean, this is a 4-hour chart, and this is what I'm looking for potentially on the VIX is a double top and then a breakdown. You have it on wheat. And when you take a look at a weekly chart, this is clearly a damaged chart. I wouldn't say that this is done with its bull run until we break down below Let's create an alert. Okay. So if we break and close down below 972.50 the bushel, wheat is in a lot of trouble. A lot of trouble. We'll see a retracement back down to this rising lower band of support in yellow. See if that holds, but it'll be in a lot of trouble. Now moving on to corn, and the reason why I focus on these charts. Wow, corn's looking good. Corn's looking good. Weekly breakout potential, close to a breakout. But on a intraday chart, corn's pulling in. What is this? Let me see what this wheat is of last week or this week. This is of last week's price action. This week's new price action. Weekly chart is not updated yet. You're seeing after last week's breakout on a 4-hour time frame, you're seeing a retest of the breakout point. Now, if we fail to hold, let's call it 780 on corn, that's going to be a big problem. It'll probably retrace all the way back down to this lower band of support here at 725. So the reason why this matters, folks, is that the market's focus, right, is on inflation. Now you're seeing wheat prices come in, steel prices, uranium prices. You're seeing corn prices on a weekly chart still looking very strong. Way too early to make a call on that failed breakout. But we're watching on a 4-hour time frame. This is like our canary in the coal mine. If corn prices fail to hold this 780 mark and we close down below it, that spells problems for the week for corn. And even when you take a look at the Bloomberg commodity index, this is a 4-hour chart. You could see we have broken trend here. But being that we're more macro traders here, I don't want to rely upon a 4-hour chart. I want to pull back, right? Get that higher level view of the battlefield. Yeah, man, this was a sell signal. You had a breakout. So the Bloomberg Commodity Index broke out. Broke out once, failed. Broke out again. Longs weren't having it. Shorts pounced all over it. Hammered. Broke down below the lower band of support. When you take a look at it on a weekly chart, how's it looking? It may not be updated for this week. Bam. Horrible. Poof. That's bad. So what we're seeing set up here is the commodity space beginning to weaken up some. So is it demand destruction? It's hard to say with wheat and corn prices weakening up. Maybe there's more supply out there than what people are fearful of, because I don't know how much demand destruction you can have for wheat and corn. People have to eat. But clearly, when you're taking a look at the energy market, you're taking a look at oil prices. Oil prices are coming in. Natural gas prices are coming in. So this is bullish for the market. Let's continue on here. I think it's valuable to play catch up here to see where we're at with commodities, because this all speaks to inflationary pressures. And you could see a market that finally buys into this. They say, okay, look at this. Look at all this stuff happening here. We're seeing commodity prices come in. What does that equal? That equals maybe a Federal Reserve that doesn't have to be as aggressive as they have claimed to be. They didn't roll off debt off their balance sheet. Their balance sheet grew last week, despite the fact that they raised rates. Soybeans holding support here, not much to talk about. Let's move on. I think we covered everything. Yeah. Let's go to some comments. Gemini Cancer cusp of that's awesome. Oh, I bought calls on you bought calls on Devon's swing. Let's bring up Devon. Folks, TrendSpider, 35% discount code below. If you're looking to change up your strategy with a rules-based approach, this is for you, DVN. So you're looking for a counter trend rally, short-term swing, my guess? Hmm. Yeah, okay. Okay, how far out in the money did you go? Did you write that in there? Yeah, you can get one. Yeah. I just wouldn't want to stay too long, right? Because you have a massive outside reversal bar here. Only a few trading days left to go in the month. Uh, so a lot of technical damage here. So for your trade, you really need to drill down, take a look what it looks like on an intraday time frame. You have support immediately below at 55.70. We could rally off that level. So I'm okay with that trade. 70 strike expires in 2 weeks. All right. Yeah, I'd be real quick. Book those profits really quick. Because that theta decay really hits you on those 2 week. Usually what I like to do is I like to go, if I'm going to buy the options, the at the 45-day time frame on options, that's when you begin to see time decay really ramp up. So I like to go out beyond that 45. I could go out, if it's really short term, I'll go out 50 days, 55 days, whatever's available, or longer. If I'm really bullish and I want to get long, like with NUGT, went out to September call options. Bob, consistently there has been no volume in any type of trading. Can we use that as a signal when we see volume, of course, with other details? Well, so the one thing that we have seen of late is volume has picked up. Unfortunately, it has been to the downside. I mean, when you take a look at the Qs, you saw some. This is a 4-hour chart. You saw volume pick up on Thursday. You saw some volume on the 13th. So, to be fair, volume has picked up to the to the upside and to the downside of late. There was a big lag in any type of volume for a while, but I think that you're seeing people get more bold, both to the long side and to the short side. And frankly, even at these levels, you're seeing short interest rise. This is the short volume, as reported by FINRA, rise. You're seeing higher lows. So I think that they're right on the cues. In fact, I'm going to go to what I was talking about earlier about what I think is missing in this market. And that is this. Take a look at the S&P 500. We smashed through one support level, lower band of the declining downtrend channel, but popped off of another at, let's call it 364. Okay. So you know what? Check that box. That's a good thing. Volume on the week though rose. So again, we're seeing volume rise somewhat. As for Where are my IWMs? IWM. What fund is that? iShares. Sorry, I must have closed this out. As for the small caps, they bounced off of the lower band of support. They also filled the gap, which opened up back here the week of November the 9th. So check that box. We're down at that lower band of support. What does concern me here is that at current, Stokes are rolling over just as they did here, just as they did here. Might they roll back up and put in a higher low? Maybe. We'll keep an open mind. But right now, it's pessimistic. What's missing from this equation are the Qs. The Qs have not tapped their lower band of support in blue. They have not tapped this horizontal support level at around 265. So what I like to see here, before I got bullish, I would love to see a red morning. I know for you folks that have been watching for a while, especially members, I repeat this over and over and over again. For many others, they're new. They have not been down this path before. It sounds counterintuitive, and I get it. You want to wake up. You want to see bright green futures. It's a brand new day. The sun has risen. The storm is over. It's a new bull market. It doesn't work that way. It does not work that way. Been doing this for close to 30 years. It doesn't work that way. If you do get a painted tape and it rallies, we close higher. Maybe we'll get another day higher. All of a sudden, it rolls back over again. How many of them have you seen so far in this bear market? Right? We got to learn our lesson some point in time. Stop chasing the green futures. So, what do we need to see here? We need to see the Qs break down. What have been the relative laggard of late? The Qs. Of all the indexes, the Qs. We need to see them wash out. They broke down below support last week and they closed there. That leads me to believe they're going lower this trading week. Might they rally back up to retest the 279, 280 mark, which acted as support? Sure, but it's probably going to fail. It's probably going to fail. I would not buy that rally. If we close back above 280, then maybe I'm wrong. Okay? Until then, usually we're right. Now, what we're missing here is the VIX. You know, we can go back in time. I've done this before. Benefit of the newbies out there. And that's not being condescending. It's really trying to help. 2000 VIX. Remember, when the VIX is high, you got to buy. When the VIX is low, you got to go. Is the VIX high right now? Meh. Yeah, it's elevated. It's not high. It's elevated. Post.com crisis. Excuse me. This was irrational exuberance. This was the this was the dot-com crisis. This was 9/11. Sorry. This was the great financial crisis, 89.53. Remember, all back here, the averages are about 45. Back here is when things got real fast, 89. Fast forward, what was this? This is the first taper tantrum, 48. Second taper tantrum, 50. COVID, 95. 85. We haven't even hit 40 yet. I don't make it up. History has shown us that's what tops look like. Can't make it up. So this is why we're sitting on a ton of liquidity. Would I go opening up new shorts right now? No. S&P 500 hit support. IWM hit support. Maybe I'm wrong. Why would I open up shorts and I could be wrong into a support level? Can't do that. So anything's possible, but this to me is a bullish chart. Stokes hooking up, RSI hooking up. I have to say, path of least resistance favors bears. Now, Why do I want to get very, very long of this market when there is blood in the streets? I'm looking at the Bulls versus Bears index. Here was May, the last time we spoke about, excuse me, April, when we spoke about it in earnest. I said we're probably going to rally, right? The markets were oversold, sentiment was horrible. We were ripe for a rally. We got the rally. Now we're stone's throw away from taking out those lows. If we take out those lows, and this is what I mean by what I say is counterintuitive, if we take out those lows, while it may sound bearish, it's actually bullish. It's counterintuitive. Sentiment is horrible. That's when you want to take that liquidity that you've been so disciplined in building. You want to pat yourself on the back for surviving the shock. Start putting that money to work. Have your watch list built up, NVIDIA, Qs, all the good stuff. No junk names. Stay away from the junk names. High quality. You want to stick with high quality names. Now, what we're looking for here is price action like we saw on Bitcoin over the weekend. Folks, if you checked out over the weekend, Bitcoin had a mini crash. I wouldn't call it a crash, but a mini crash. On the 17th, which was Friday, we closed out the day at 20,432. The low of the weekend was 17,600. So what did they do? They closed it down on June the 18th. What did they do on the 19th, yesterday? They pushed it down. What did they do? They closed it up. That is a short-term bottom. Bitcoin is probably going to rally. And you could see that it's trying to rally right now. Let's update this. It's trying to rally at current. So we've already put in a new daily high. Now, what I would do here, and I actually bought more Bitcoin today. I dollar cost average in every Monday, $50 a week. There's your lower band of support. If we break down below it, I would avoid. Here's your upper band of resistance. If we break out above it, there's probably going to be a rally on Bitcoin. But remember, all this happened on, actually, no, volume was pretty good. I was about to say light volume, assuming there was light volume over the weekend. It wasn't. There was very good volume over the weekend. All right, let's talk about PE ratios. Schiller PE ratio. This is the first time in several years that I've been able to say we have the Schiller PE ratio with a 20 handle on it. Still expensive on a relative basis, meaning relative to the mean of 16.95, but certainly optimistic. The Buffett indicator back down to fairly valued. Look at that. However, we're still beyond 27% beyond the historical trend line. Ideally, we are trading down below historical trend before we could say, you know what, this is probably all done. That's when the Buffetts of the world are going to come out and say, I just bought XYZ company. They're seeing value out there. When you start seeing those whales come out saying they're stepping in, they're buying into the breach, the value investors, that's when, okay, that's when confidence begins to build and the shorts get squeezed. Oh, for the pop. Okay, gotcha. Good stuff. You bet. You bet, Yoga Mac. Yes. Smash the like button, please. Binance bought into Bitcoin over the weekend, heavy to I see. Okay. Well, that's not a good reason to go buying Bitcoin then, right? I'll be honest with you. I'm not going to come on Trader Isaac. I'm not going to come on here and pretend that I know. All I know is that I want a piece of at least some crypto. I'm going with the best of breed right now. Bitcoin. I know Ethereum's up there as well. I don't know who's going to win out. My guess is that ultimately XRP is going to play a very big role. That's why you can't buy it here in the United States. So um, XRP is one that I would like to buy. I did own it at one point, but I sold it. So Ethereum, I'm not sure. I'm not sure. Looking at the chart, we could take a look at the chart. Spelled it right. Yeah, it's looking okay. I mean, I would wait. Keep in mind that keep in mind that the cryptos trade at current along with risk assets. So what we need to do is wait and see how equities open up to see how they trade. If equities fade, you may just see crypto fade along with it. So I'll throw out that one caveat that we need to be worried about that reversal bar from yesterday being a bit of a head fake. So let's see how they trade with equities this week before we get excited. But taking a look at all that being said and taking a look at the price action on Ethereum, very similar to what we're seeing on Bitcoin. Very good reversal bar. It didn't come down to fully retest the lows like it did on Bitcoin. So I would just do this. I would definitely wait for the breakout. I would wait for the retest, nibble there, add more in a continuation breakout above, really above 1264, 1265 on Ethereum. Stokes look very, very oversold. They're hooking up. It's looking good. But let's see how they trade along with the rest of the market. How much time? I eat up a lot of time. I didn't think I had a lot to talk about tonight, but man, I could chatty Cathy up a storm. Okay, let's do some chart requests. Go to the members area, see who requested, if any. All right, what do we got? BTU. Okay, we can do that. BTU. If you guys want to pop some in there, we can go over them. We have about 15 minutes to go. Oh, I'm glad you brought this up. I was thinking about you. I was talking to my father yesterday. We were talking about different ETFs, and I was talking about the artificial intelligence and robotics ETFs. That bots BOTZ. I took a look at that one. It's loaded with Chinese stocks. I'm going to avoid that. UBot, I have not looked at. I will. Is that the one? I think that's the one that doesn't have options on it. Yeah, that's the one. Wow, the thing's yielding 7 1/3%. Is that right? That can't be right. It says it's yielding 7 1/3%. Let's check that out. That can't be right. That's not right. I couldn't imagine that being possible, even any dividend. No, it's not paying a dividend. Stockcharts.com is inaccurate. Okay. It's not optionable, so I'd have to buy the shares outright. Not yet. I think we could see sub 12 here, $11, an 11 handle, maybe a 10 handle, and that would be very attractive on UBOT. Let's see what TrendSpider has to say. I wouldn't do it. I think we're going lower. We blew through a major volume shelf last on the month. We haven't closed out the month yet, but last week we blew through it. Wow. Here's the automated trend lines. For those folks not familiar with TrendSpider, automated technical analysis, I am not drawing these trend lines. The algorithm is 35% discount code below. We broke down below support the week before last. It looks as though we're going to head down lower here, Franklin. So I'm going to stick with that, probably even. I'm liking this volume shelf down here. We're good to go. Did you see that Bitcoin short ETF? No. How are they doing a short ETF? They must be doing it off the futures. They got to be doing it off the derivatives, off the futures. No, do you have the symbol, Yoga Mac? Walmart? Bob, you should bring your pops on the stream one time. I bet he's got alpha. Oh, he's got alpha. He's an ex-Marine. Yeah. Happy after Father. Same to you, my friend. Thank you very much. Yeah, my dad's a good guy. Okay. SPY. You got it. I think that's a good one because we spoke about SPY on a weekly time frame. We could do a deeper dive on that. And what did I was supposed to go over for gay? BTU. BTU. All right, let's do it. All right, so we were talking about Walmart last Thursday night, I believe it was, setting up as a potential W formation. And it's still a potential. I want to see if we break. I don't want any sensitivity. Pure. Good. Now we have an alert set down here already. So on the week last week, it was a bearish week, right? It would imply that we're going to make new lower lows. Can we undercut the lows of May the 16th? Sure, easily. Does that mean that it's dead in the water? No, you can have an undercut double bottom. As long as we rally back and close above 117.50 by the end of the week, we're okay. Daily chart. Now, here's the problem for Walmart is that, we went over it on Thursday. It had broken out on Thursday. And as a matter of fact, I set the alert here. You could see, here's my note to self, Walmart retest daily support. It fired off. However, it failed to hold that retest. So I can't buy this stock right now because many times with a stock that's flashed a bull trap or also known as a breakout point failure, you'll get that breakout point failure. And when you get that, that means that you broke out and then the next day, usually you get a retest, it holds, then it rallies. This happens all the time in a bear market where you break out, head fake, suckers move in, and then you get hammered over the head. Usually you retrace to the lower band of support, check that box. We already did that. But many times you break to new lower lows. So that being a known, I wouldn't buy this here, even at support, because we've just had a breakout point failure. So I would wait on this, see whether or not it moves lower and is it able to flash a bullish key reversal bar to close back above these support levels sometime this coming week. I would avoid it, even though it closed at support. Horrible price action on Friday. And we were down on volume. Avoid it. What else do we have? SPY. Well, let's talk a little bit about seasonality. But we'll get to that in a moment. So, again, folks, we broke down below support last week. Excuse me, the week before last. Continuation move lower last week. Let's go to the monthly chart. Now, we closed where we had resistance back in November of 2020 and where we found support in December of 2020. So we may very well have a short-term bottom here. Is it a longer-term bottom? Absent that spike up in VIX, I doubt it. But this may hold for all I know in the short term. Longer term, I don't believe it will. We haven't had the washout yet. So 361.72, interesting. Let's see whether or not we break through it, touch, bounce, keep a little bit of sensitivity on. We'll want this to fire off twice. We'll keep it live for 40 days. And there we go. So we'll see. We'll see. I hate that. We'll see whether or not this support level holds or does it fail. But it's pretty significant support. More serious support would be down here. Right down here. 326, around there. Give or take a few points on the S&Ps. It's not a rock, it's a cushion. So you have a little bit of wiggle room in here. Maybe some support down here, 340. I don't like it. I like it back down here. I think that we could still see some selling here, but short term, we do have support below. Let's go to the daily chart. Now, the daily chart Here's the automated trend lines. We technically broke down on Friday. You could argue that we broke down on, can we argue it? Splitting hairs. We broke down below support. Now, for us to even consider buying the S&P 500, it's got to break through this. It's going to happen fairly soon. 1 hour time frame. I don't want that much sensitivity. I'll edit this. You know, this is actually the wrong. Oh, it is set. Okay, good. Good. Okay, I thought it was set on the wrong support level. So right now we're in no man's land on S&P 500. We need to see how we close out the week. I mean, we bounced off of one support level, but we couldn't close back above another. Volume was strong. I can't get excited about the market yet. What we're waiting for here, first, before we go to Qs, let's go to seasonality. And this is what gets me excited. We've had a lot of damage done to this market. And, you know, at one point in time, there was a saying, sell in May and go away. But in recent years, that has not been the case. July has been a very strong month. It's only eclipsed by April and equal to November. So July is a very strong month, where June is typically one of the weaker months out of the year. So I want to be bullish on this market. We have seasonality that is in our favor. We have commodity prices coming in. We have support levels on a weekly time frame getting tested. We have sentiment indicators very oversold. So what are we missing? We're missing a washout. We need a washout. Ideally, we find it on the Qs. Let's go to it. Now, the Qs last week, very, very bad. Bear flag setup, weekly time frame, broken. Might rally it in an effort to try to recapture prior support? Sure. It's going to feel like a bull market. But if we don't recapture it and we roll back over and we take out the lows of last week, you're going to think it's Armageddon, because you're going to see all these stops set below last week's lows. They're going to fire off rapid fire. And the floodgates of hell are going to open up in a very, very big way until we get down to my initial price target's 265. I think we're coming down here. Ideally, to 260. That's the support level I want. I want to be buying down there. Let's go to comments. Bitcoin short ticker. Oh, BITI. Okay. Okay. Why is that not coming up? Oh, it's on the Toronto Exchange. Yeah, I think it's on the Toronto Exchange. Yeah, I'm not seeing anything for the United States. Chevron, Egypt agreed to explore new Mediterranean gas deal. Cool. Dang Bob, I sold the 340 puts last week on SPY. Time expired, not volatile enough. I thought about rolling them. All right, so you were long the puts and you sold them, or you were selling premium on the puts? I probably wouldn't have rolled them. I think that you're at historical support. I wouldn't have rolled them. If you were looking to short them, if you were long the puts, I wouldn't have shorted them. I would be fine at a 340 strike selling the puts. But right now, I would keep a long hedge on, meaning sell the calls. I think when crypto settles, more stability will come to equities, but these insolvent liquidity protocols are putting a lot of fear into investors. Yes. I see. Oh, okay. So it opens tomorrow. Thank you for that clarification. Long and sold. Gotcha. I think that was a wise move not to roll it out. Not you hit support. Best not to fight that. And you're probably feeling better right now with the futures. Still up about a percentage point. All right, folks. With that, folks, don't forget, subscribe to the channel, like. For those new and not on our email list, I have a 5-part video tutorial below. My top 5 favorite candlestick patterns, video tutorial, free. And you'll get alerted when I send out my best stock charts for the new trading week and whatever else I send out that's free. I don't spam either. And everybody, enjoy the remainder of your weekend and have a profitable trading week. Thanks for being here. Thank you very much. Happy Father's Day and be well.